Right, a few thoughts on Xerox and the current ratios. Let's start off by looking at the news rather than the ratios and the figures. There's a potential catalyst for Xerox in the works here. It's not at the forefront of the news, it's not on the forefront of minds of investors or even employees, I'd imagine, unless you're part of the legal side of things. A lawsuit has been filed to get refunds from the American state. There's more than 1,000 companies out there, including some massive names, happy to see Xerox in the midst here. This is all off the back of the tariffs being declared unconstitutional. The thought here is this could well become quite a long, protracted legal battle to get this money back. But I'd imagine with the weight of these companies, a quick resolution or settlement it's quite a distinct possibility. To complicate matters, Trump's retaliated with a hike on global tariffs from 10% to 15%, so it could be a case of what you get given by one hand will get taken by another hand. It is just a wait and see scenario, definitely something to keep tabs on. Another bit of news, and perhaps the bigger piece of news, is the debt financing. Xerox entered into a partnership with TPG, which is backed by its IP. Again, it's not something investors really wanted to see. It's just more debt, let's be honest. They did say that they could potentially use this new financing to pay down existing debt. That's encouraging. Hopefully, it's debt with higher servicing charges that gets paid off. Looking at the press release to say that it's going to be used to accelerate the Lexmark integration, it just further questions management's forward planning and projections, in my opinion. The acquisition was announced in 2024, if you remember, the Lexmark acquisition, I believe late 2024. It was closed in 2025. I mean, they've had ample time to get the ducks in a row. Some good news, the dividend was declared. So it's official. Ex-dividend date is 31st of March. The quarterly dividend remains unchanged. And the UK resellers have not been impacted by Xerox's revamp of its go-to-market structure. That's good for UK jobs. Going on to the ratios, which is probably what everyone's waiting for. Ratios, dividend yield. Yeah, it's over 5% now. You're going to have a class of yield chasers getting in, especially as the Federal Reserve starts reducing rates. The strange thing here is Xerox was, in recent years, a dividend stock. And then it had its dividend cut drastically from $1 to 10 cents. This is not long ago. So it's all come full circle. It's mental how these things pan out. Providing they don't cut the dividend, and I can't really see them cutting it completely given that the common dividend payout is about $13 million, which in reality is not much, is it? The Q1 dividend is declared too. That's official, which is positive given that the dividend warrant that was issued this month, earlier in Feb. So that could have easily been used as an excuse by the board to hold back on the regular dividend. Obviously glad that's not the case. Very positive for those who are focused on the dividend. Free cash flow to market cap ratio, let's get on to that. Well, that ratio, free cash flow to market cap ratio, is pretty much 1-to-1. Even Stevens. In fact, free cash flow projection is about 250 million, whilst the market cap is less than that. If the market worked on basic maths, if I put in the equivalent of the market cap of a company into that company, injected it as liquidity, then the market cap, it should double. And that's the same with the share price. Obviously, the market doesn't work like that. The stock market doesn't work like that. But in reality, that's how real life works. Think about it this way. You're a shop, you're selling a piggy bank, and you set the price as £5 for the piggy bank. There's customers out there eyeing it up. And then you put a fiver into the piggy bank. What's it worth now? It's worth 10 quid, right? £10. The disconnect between the way the market works and real life thinking sometimes it's quite startling. Moving on to the market cap to sales ratio, the multiple here is 30. Revenue is guided for this year, 2026, It's guided at 7.5 billion, whilst the market cap is less than a quarter of a billion, so 250 million.